Hey everyone, and welcome to another episode of Pathfinder presented by Payload, the leading digital media company in the space industry. We have a big guest today, Chris Kemp, CEO of Astra, small launch and propulsion provider on the show. You may recall that Astra went public back in 2021 at a $2 billion valuation, today trading at just a fraction of that price. We chat with Chris about the current state of the business, the financial health, lessons learned, and the future of the company. On to the show. Chris, very excited to have you on the show.
Great to be back.
So I'm just going to jump right into it, Chris. In a recent article, you were described as a fighter. And I definitely agree with that. It's been a roller coaster since we last had you on the show. And of course, since Astra went public. So maybe just a level set, why don't we get started? Like, where's the company today in terms of active lines of business? What are you working on? What are you focusing on? And what maybe aren't you focusing on anymore?
Yeah, thanks. And it's great to be back. Great to be here. We're here in the new rocket factory behind me. And where we've really been focused is the businesses where we have customers, right? So when we went public, actually the day we went public, we had a much broader vision. We wanted to not only focus on launching satellites, but also building satellites. And so we acquired a company, great technologists called Apollo Fusion, and we spent a lot of time taking that product and really getting it to the point where it was tested in space and we could produce it, scale. We started selling that product alongside the launch business. And as you know, this last year in 2022, we made a really tough decision to really narrow our focus to these two core businesses that we were in, right? Which were not only getting things to space, but keeping things in space once they're there through our satellite propulsion business. And we've had a great run. We've had a number of leading satellite companies purchase these engines, and we're contracted now to ship hundreds of these engines over the next couple of years. And we're working really hard right now to make sure every single one of these engines is reliable. We have 9 of them in space right now. They've performed flawlessly. We want to continue that track record of just an incredibly reliable product that not only is a great product at a great price, but we can really build a lot of trust with our customers that Astra spacecraft engines can power their satellites in space. And then the team behind me is working on returning to the pad with an equally reliable launch vehicle, and that's been a journey. Talk more about in the interview.
So let's actually, I'd love to go back to the original thinking behind Astra, right? And we were just talking about this before we started the episode, but we met at a conference at a Morgan Stanley conference back in the end of 2021. And I remember asking you the same question, like, what was the origin? Why did you start Astra? And you pointed to a John Walker piece from 1993, which I think was called like a rocket a day keeps costs away or something. So really the foundation for the business model, reducing the cost of a rocket by constantly improving the design and leveraging scale through launching frequently, right? But would love to hear maybe, let's kind of start there, right? Because your original goal was launching every single day or launching weekly and then eventually daily, right? So let's maybe talk about the original thinking behind starting Astra.
Right. The original idea was through scale, you can bring the cost of launch down. And really through scale, you can bring the cost of space services down as well. In order to make a service like a global broadband service in low Earth orbit, you actually need to have thousands of satellites, not just a couple of satellites. And so scale, at least relative scale, was required. And when you look at the space industry historically, you would build a couple of space shuttles and then you would reuse them and refurbish them. Or you would build a couple of really expensive satellites and you'd park them out in geo for 10 or 15 years, insure them, and make sure that they had a very long life. The new model, really pioneered by companies like Planet, where you could put a satellite in low Earth orbit. And in low Earth orbit, you have the benefit of the satellite can typically operate with a much smaller aperture. If it's a radio or it's a camera, a smaller lens, you can take much higher resolution pictures simply because you're closer to the Earth, right? And the problem, though, is these satellites in low Earth orbit would basically only last for a few years. There's oxygen in the upper atmosphere that would cause deterioration of solar panels, lenses, and then the upper atmosphere would create drag that would cause satellites to deorbit. Now, this is kind of a good thing because people are worried about space debris and garbage in space. Turns out in low Earth orbit, the Earth has a great garbage collector, which is the upper atmosphere and gravity. And so these satellites will just naturally deorbit in a couple of years. Um, but the problem is because the satellite is so low, you can only see a really small area underneath it or cover a very small area if you're trying to provide a communication capability. And so you need lots of satellites. And so instead of just having a couple of satellites, you need hundreds or even thousands. And in some cases, there are satellite constellations on the books that call for tens of thousands of satellites in low Earth orbit. And so when Astra goes back to its day one, the original idea, it was really about how scale was the key to the whole business. So instead of using really exotic technologies in the rocket, aero spikes and reusability, carbon fiber, we would simply we were inspired by aluminum cans, and how could we make the vehicle, which is really effectively just a big aluminum cylinder with a pointy end and an engine that actually has fewer moving parts than an internal combustion engine. How could we make these things really inexpensive by designing them to be produced, in the case of the rocket, one a day, in the case of the spacecraft engines, hundreds per year? And so we really set out to do that on day one. And that resulted in a company, a very different kind of company that built, that really designed the rocket from day one to be produced more like an automobile or more like a general aviation aircraft, like a Tesla. And that was the thesis. And that paper is a really interesting read. If you go find it, you can still, it's out on the internet. I think John Walker published it originally in the early 1990s on the Fermilab website.
Yeah.
And the thesis is simply that if you make on order of hundreds of rockets, the price comes down dramatically.
Yeah, it's a great piece. Actually, highly recommend. So just to get back to sort of the original goal, right? So kind of fast forward to where we are today. What do you think has prevented you guys from reaching or at least making significant progress towards that goal today?
Well, everyone loved the idea, right? The vision was indisputable. Everybody liked the idea of a small launch that could take a satellite exactly where it needed to go, in exactly the right orbit, as at a low cost, right? The problem actually isn't in whether the market wants it. Right now, the market will typically wait 6 months to a year for a rideshare. It's kind of like the bus, where your satellite has to wait a long time to get to the rideshare mission, and then the bus drops you off at the wrong place. But in the case of a bus, you might only have to walk a few minutes. A satellite will typically take weeks or even months to position itself into its final altitude or orbit. It needs a propulsion system or some sort of orbital transfer vehicle, which is itself expensive, to get it to its final orbit. Whereas a small launch vehicle, like the Astra vehicle, can take the satellite exactly where it needs to go. Problem is you need to do it, right? And I think I've said before, in terms of privately funded space companies, Astra is one of only 3 that can count satellites in space that they've put there, and that includes SpaceX. So it's a pretty small list of companies that have actually been able to even make it work once, let alone make it work at scale. And we started to scale the production of Rocket 3 last summer. We were making about a rocket a month. We were using about a third of the facility behind me to produce one of these Rocket 3s per month. It was before any of the equipment had shown up for the rocket production line. And what we found was that Astra had just simply underinvested in more or less everything required to make the vehicle consistently reliable. And that's because we designed Rocket 3 when we were a very small company. We had just over 100 employees when we reached orbit. And that's an incredibly small team. We're a much larger team today. And so I think what we've done over the past 2 years since we last spoke is we've invested very heavily, not only in the factory and the production lines, but in all of the different things that you need to do from a engineering perspective to look at every single failure mode, do an analysis, think about every thing that you can do to mitigate all those failure modes. There's a tremendous amount of work in the overall systems architecture design. So thinking about the requirements, managing requirements with a lot more rigor, all the way through the individual subassemblies having all of their build instructions fully documented before you build them, so that when you build the assembly for the second time, it's exactly the same. And so things that the way to think about it is, if you're a small company, your engineering team is doing the design. They're also very involved in building the prototype. They're also involved in testing it. They're also involved in operating it or launching it. That works very well when you have one team that does all those things. That doesn't scale. So the chasm that you have to cross to go from maybe making the thing work a couple times a year to making it work dozens of times a year or hundreds of times a year is designing it so that a different team of people can put it together, and a different team of people can test it, and then a different team of people can operate it, and have all of that happen perfectly without the designers there present at every step of the way. And that's actually what's really quite challenging. It requires a larger team. It requires much more discipline and rigor in your engineering processes and your tools and your systems. And we've made that investment this time. And we saw, SpaceX made that investment between Falcon 1 and Falcon 9, and it worked. And they've had hundreds of successful flights because they just really made a tremendous amount of investment in the rigor in that program.
Right. Now, just thinking about sort of the thinking about Rocket 4, maybe just give us a quick rundown of the specs of Rocket 4. And then let's just talk really quickly sort of another seemingly obvious question that I'm sure you get quite a bit, which is that every launch company is effectively pivoting away from small launch, right? And I think if you look at Rocket Lab, I was actually looking at this the other day.
Yeah, so define small.
That's a good question. Call it sub 1,000 kilogram, right? Or one might even argue sub few thousand kilogram. So I was looking at Rocket Lab's financials the other day, right? And if you just take a look at Electron, they've launched that vehicle successfully 36 times. Right. So amazing from a technical progress and achievement perspective. But if you actually look at the financials, I think that entire program is still operating effectively. I think at best case, flat margins, right? After launching 36 times. So what do you see that others don't?
Yeah, I think, I can't comment about Rocket Lab, but I would say that there is a capacity that is the minimum viable capacity. And that number has changed, right? So if you go back 10 years, there were only really big satellites and really small satellites, right? So CubeSats like the Planet constellation were by far the largest example. So there were a lot of companies that emerged to service CubeSats, right? So companies that had deployers that could deploy batches of CubeSats on a rideshare mission. But then the market has evolved, because as these CubeSats demonstrated commercial fit in the market, the companies decided that they wanted more resolution, more capacity, more onboard processing, and then they got bigger. And then what happened was SpaceX began launching Starlink satellites. And more importantly, Starlink as a service began to operate. And people realized, wow, from low Earth orbit, you can have incredibly low latencies. And you can actually have enough capacity to support a relatively large number of users. And so then Amazon came in with Kuiper. And then the DoD started to realize, wow, these satellites are very important to support communications from a military perspective. And the SDA started designing a constellation that was built on top of a competitive commercial ecosystem of small satellites. And so now we have a significant government investment. Just in the last week, you've seen north of $1 billion be awarded to a number of different companies to build small satellite constellations, right? That will literally be America's first line of defense for tracking and communicating when missiles are launched. And this is an incredible constellation. And so what we've seen is that the satellites have gotten bigger, right? So the satellites are now on the order of 400 or 500 kilograms. And so that's Too big for some of the small launch vehicles, certainly too big for our original Rocket 3 vehicle that kind of had a maximum capacity around 100 kilograms, even at its final configuration. So we made the strategic decision to go bigger, but still small, right? So Rocket 4 will have an initial capacity of around 600 kilograms for these communication satellites. And with kind of a Block 2 upgrade to its engines, we'll anticipate that going just north of 1,000 kilograms. And that will allow us to service basically all of these small satellites and all of these small satellite constellations that we're aware of in LEO, or the vast majority, I would say all of them. I would say the vast majority of these new satellite constellations. And why that's exciting is if we keep the rocket small, then we can always launch one of them or even tens or hundreds of them, depending on how big they are. And the launch cost will be relatively low compared to a larger launch vehicle. And the rocket equation on a reusable rocket is your friend, but scale is your friend if you're manufacturing these things in high enough volume.
Right. So now you have current existing contracts with the Space Force and the DIU, correct?
Space Force, DIU, NASA, and some other commercial companies.
Okay, and are those milestone based? I mean, I assume they're milestone based. How are those? How are, I guess, those organizations viewing the program right now?
Well, they're very actively involved in the program. So, in the case of the Space Force, we were hosting them here for one of the first reviews that we do, called the Service Readiness Review. There's another review. We're putting a pretty significant amount of documentation together for them for their review this quarter. And in each of these reviews, there's typically a milestone and a payment associated with that milestone. So the team right now is working very hard this quarter to put together this next review milestone together.
Got it. Now, just to kind of take a step back, so when you look at sort of Rocket 3, right, one could potentially argue that it was done very quickly, right? The design process and the development process, and obviously you were at a very different point into in the company when you developed and designed it, like you said. So obviously the reliability of Rocket 3, just given sort of how many times you ended up launching and how many times it was successful, something I think around 50%. All right, how are you thinking about Rocket 4, and how do you plan to improve the reliability, right? What are sort of some of the engineering decisions that you're taking that's different from what the development of 3 looked like?
Well, it's a great question. In some ways, the smaller the rocket, the harder it is to make it reliable because you can't just throw margin at things. You have to have you have to extract the maximum amount of performance and weight savings possible just to make a smaller rocket useful, payload effective. So with Rocket 4, we do have a little bit more room to play. Not as much as a Starship, for example, but it's certainly a much larger vehicle. We have, from a reliability perspective, uh, a lot of the reliability work comes very early in the design of the vehicle. So just considering all the potential failure modes, making sure that you've designed and allocated your margins effectively across all the different systems, and made the right trades. You can always make the thing incredibly expensive, either by using all the most expensive parts and the most expensive materials and X-raying everything and having a tremendous amount of testing at every single part and every single subsystem, and then you'll have a product that doesn't work. So it's actually not true to say that you should aim for perfect reliability, because perfect reliability would be exorbitantly expensive, and no one would buy launches from you. And so it's about threading that needle and making it, uh, designing it so that you get the most inherent reliability in your design possible with the materials that you're using, with the processes that you're using, balancing your risks across all of your major subsystems, so that you don't have so much risk in one area that risk materializes in a failure, um, too often. Category 2 mission, which is what the Space Force mission that we're working on, implies a 95% target reliability of the program. So there's an enormous amount of work that the U.S. government and the DoD puts into the mission assurance regime, which is something that we do in close collaboration with them to ensure we at least hit that 95% or better reliability target.
So let's just talk for a second about redundancy. So Rocket 3, in effect, and this is me not knowing anything, I'm just assuming based on I know the cost structure you were trying to hit was in effect, as my guess, a single string, right, in terms of components and architecture for the most
That's
part.
correct. There were a lot of single string systems.
Correct. So how are you thinking about redundancy in Rocket 4? Like you're in, and I think the public number you've said recently in a recent interview was I think 5 million $5 million purchase price with about 50% gross margins.
That's right. It's scale. Yeah. And I think individual flights, if you're just buying a one-off flight, could be more than that. But what we want to do is show that this is a viable option for folks that are doing mega constellation deployments or maintenance. Right. So at $5 million at 600 kilograms, that's about 33 kilogram, which isn't that much more expensive than a SpaceX rideshare. And so it really competes in the rideshare space versus a dedicated launch space in terms of price, but you get the benefits of a dedicated launch. So that's been the focus is to balance cost against and of course with a rideshare, you've got the problem of you're deploying alongside tens, if not hundreds, of other little satellites, and so there's risks associated with that as well.
Chris, tell me a little bit about the engine development for Rocket 4. How are you thinking about how much of the engine you develop in-house versus external providers?
Yeah, it's a great question. Again, in Rocket 3, we developed both engines in-house. So we had the first stage engine, we called that Delphin. It was a 6,500-pound thrust electric engine. We developed the electric motors, the battery packs, speed controllers, all the software for that, the combustion chambers, everything. So we have a lot of that experience in-house here. Mike Judson led that development. Mike is now leading the first stage engine development here on our propulsion and fluid systems team. For the upper stage engine, we decided to purchase that engine. That allowed us to focus all of our resources on our first stage engine development. And the upper stage engine that was developed by Ursa Major had the right thrust output that we needed. It was also a company that spent a tremendous amount of time and energy developing this engine, more than we could. They raised a lot of capital and spent the better part of a decade, 6 or 7 years just on this engine. And we feel that it's a very high performing engine, great ISP, and that gave us an upper stage that could again throw considerably larger payload into orbit. And again, it allowed us to focus our energy on the first stage engine. So with our first stage engine, we took a slightly different path. We wanted to put turbo pumps on both engines. For the first stage engine, we wanted to make those engines as simple and inexpensive as possible. So we decided to use what's called a tap-off combustion cycle. So you're using the gases from the combustion chamber vented into the turbo pump to spin the pump. And we were able to find some great technology for that, which we've been working and building on for the past 2 years. And I can't talk a lot about the the contractual relationships there, but I can tell you, it's a great engine, and
sure,
the team's been working really hard on it, and it's able to produce upwards of 35 to 40,000 pounds of thrust per engine. So we're going from 5 engines that collectively produced about 35,000 pounds of thrust to 2 engines that collectively produce 75 to 80,000 pounds of thrust. So we have a considerably, like twice the thrust and 5 times less engines per engine.
Right. And I think those with the investigative noses might know what you're referring to, but we'll leave it at that. So I do want to ask on strategic partnerships, right? So when you look at a lot of your, call it, competitors, right? Or not a lot, I should say, some of your competitors. There's strategic partnerships with primes, or there's usually some type of large ownership backing or some marquee pre-order, right? In the absence of that, how are you thinking about any type of strategic partnerships? Is this something you're considering? Obviously, it'd be hugely positive signaling in certain cases. Is that a scenario that you're even thinking about?
Yeah, we in our most recent earnings update, we did mention that we have brought in PJT Partners, which is one of the shops that we've used in the past here at Astra. We're very interested in exploring commercial strategic opportunities out there because, again, we've got a really unique set of assets, right? We've got some of the leading aerospace companies using our propulsion systems and their satellites. We've got a very unique capability we've built to produce Rocket 4, and the software stack that we built to automate operations is pretty unique. And as a company right now, it's really tough in the market. So if the only thing we were relying on was shareholders buying stock, that wouldn't make a lot of sense. So we've just announced we've put in place an ATM, we put in a debt facility, and further exploring any strategic opportunities that are out there just makes sense for us. And we believe in a strong industrial space ecosystem, and I think Astra can play a role in that, given we've already made a lot of the investments in scale that are going to be required to put large constellations in orbit, and certainly on the launch side to deliver and maintain those constellations.
Yeah, look, there's no question. I think, someone of your position, obviously there's been a lot of frustration from investors, but I will say that one thing that I don't think people give enough credit to is even some of these very, very well-funded companies out there that seemingly from the outside looking in, and I'm not going to point to any company itself, there's a lot of issues out there. And, there's a lot of seemingly well-funded launch companies that, haven't gotten to orbit and have capital issues, right? And there's companies out there that need hundreds of millions, if not billions of dollars, right? And the capital markets are not a place. This is not the time to be going out and raising that type of money. So I actually wouldn't be surprised if there are companies which maybe on paper may look like they have more mature, or call it better funded, better capitalized launch businesses that, I would say looks can be deceiving, right? So it's a very, very different market right now for all launch companies. It's not what it used to be.
It's really hard. And, when you begin with the thesis that through scale, you have the unique capability you are offering to customers, you have to invest in scale, right? So I'm in a 250,000 square foot facility here, designed primarily to produce rockets, right? So behind me, you can kind of see there's the beginning of the rocket production line. You literally load a coil of aluminum in one side of the building, and it's uncoiled, flattened, laser cut, rolled up again, friction stir welded, hoisted over circumferentially. So, this is a production line really inspired by a car factory, but it's impossible to actually make a rocket until you make the investment in the production line. And so
Right.
we had a real challenge where we knew capital would be scarce, as the market began to struggle in 2022. But we either had to decide to not do the thing that we said we were going to do, or follow through with it,
Right.
and work with customers like the Space Force and others to hopefully show us that this is a capability that they need, and they are leaning in. And we're here to deliver what we said we would deliver, which is a mass producible vehicle that can meet the needs of the market.
So looking back, I think post SPAC, I think the number that if I remember correctly, was something like $250 million that was spent on the manufacturing facility. And correct me if I'm wrong, by the way, there.
I don't have the exact figure here, but I can tell you we did raise $500 million less fees and things like that. So I think
Sure.
the net of that was really split into two areas. We acquired Apollo Fusion, and we made a considerable investment in investing in that program, building a production facility to manufacture spacecraft engines down in Silicon Valley, down in Sunnyvale, and then expanding this facility so that we could. And then we did a lot of investments in the mission assurance area. So we have a whole reliability lab and just broad investments in machines like CT scanners and X-ray machines and metrology equipment, so we can ensure that there's a consistency in the parts going into all of our products.
So, looking back, right, would you say that like the decision to capitalize the or spend the capital on those types of facilities was well, actually, let me phrase this differently. What would you have done differently, if anything, in terms of the capital outlays from the get-go? Considering that you have this balance, right? You need to spend the capital on the facility to actually get to the production capability that you need to be able to launch at the cadence that you'd like to launch. At the same time, you're at the same time, a company's still in R&D phase, right? Not in production and manufacturing phase, right? So would there have been anything differently you would have thought about in terms of like capital expenditures?
Yeah, well, I think the other thing not to forget is, if you don't have the equipment, you can't design the rocket to be made on equipment that you don't have, right? So, for example, if you intend to have a rocket that has a certain performance profile, and you need to use a certain kind of aluminum that's a certain thickness, and then you need to be able to weld it with a certain level of reliability. And so, for example, the friction stir welder, which is a completely custom Astra machine, and there's actually a nice video that we just put out on that whole process. You can't design it assuming that you have that capability and not have that capability, because then you can't even build a prototype, right? Or the prototype that you build will not be representative of what you will then put into production. So, there's certainly a big chicken and egg problem here, and you do have to at some point make the investment.
Right.
So I think that's a key thing. And what was the first part of your question?
No, that was essentially, yeah. The question was effectively, if looking back on it, you would have spent the capital differently, effectively.
Yeah, I think if hindsight's 2020. I think, had we known that the first NASA mission would not work, and we had every belief that Rocket 3 was going to fly those NASA flights out successfully. And when we had that issue, and it took us a good 6 months to root cause that issue, and there's a blog on it, co-founder, where I would say, knowing what I know now, after we had the successful orbital flight, probably what we should have done is not attempted to scale production of Rocket 3. We now know that Rocket 3's capacity was not sufficient to meet the needs of a large number of new satellites that are now in the market. So satellites have gotten larger. We probably could have put that capital into extending our runway and giving the team more time to get Rocket 4 out. So if I had to do it all over again, we would have made the investments we made. But after the successful flight of Rocket 3 and putting those 22 satellites in orbit, again, I had perfect knowledge of the future. I would have stopped right there and said, okay, everyone focus on Rocket 4 now. It took us about 6 months to get there.
Yeah.
Right? So,
and look,
in that 6 months, we bought a lot of inventory and we built a lot of rockets, and a lot of capital went into scaling Rocket 3, and we had to scrap a lot of inventory for Rocket 3, and a lot of that capital could have gone into all.
Yeah, and look, to your credit, if I asked that question to any launch startup or launch CEO, they would say that the hindsight's 2020, and there's a million different things that they could have done differently, right? So, I totally get it. So, okay, let's actually talk about the prop business, because that's a business that's firing on all cylinders, performing well, relatively large order book. By my calculations, a few hundred engines, and you're talking about a $250,000 to $300,000 average selling price, right? With a 50% gross margin. Now, I'm saying most things that you can find, right? This is data points you can find easily online, and generating and positive cash flow, right? How do you, let's set aside the launch business. Let's paint a scenario where the launch business goes away for whatever reason, whether it's a strategic decision or a financial decision. How do you think about the prop business being $1 billion business? Like, how do you think about, what is your kind of view around sort of the long-term trajectory of the prop business, and how do you scale that side of the business?
Yeah, I think it really does require two things. One, the market has to see the demand for the thousands of satellites that I think many people believe will emerge. There are certainly market scenarios where that demand doesn't materialize, and there's potentially only a couple of hundred satellites that are not mega constellations building their own propulsion systems. I think we're increasingly seeing the government be a large customer, other governments come in Europe and other places that could be customers. The Telesat constellation was just funded. So I think we're starting to see more constellations of small satellites, which should translate into a larger market. But that said, I also think that we've built a platform. Yes, we have a great spacecraft engine, but we also have an incredible team of people here that run an aerospace machine shop capability, a reliability lab that's able to do parts inspections. We have an enterprise software platform that's ITAR compliant that can do demand forecasting for parts. We have a program management organization that is able to execute on, a large number of customer programs in parallel, while like each having different assemblies that they're building in parallel in production. So I would say, don't think of Astra as just a spacecraft engine company and just a rocket company. We've built a company that is able to produce things at scale. All the software that's behind that, all of the supply chain, all of the infrastructure behind me is servicing both of these two programs. And so I'd say, could we add a third? Perhaps.
Yep.
I think there is a scenario where satellites are more than just propulsion systems, right? Satellites need solar arrays. Satellites need star trackers and reaction wheels and bus components and payload things, optical terminals, RF phased array antennas, and things. And so, could some of what we've built here be leveraged to manufacture other core components at scale? We've made the scale investment, right? So
Right.
many companies in this capital market will find it very difficult to buy vacuum chambers the size of this room. We've already made those investments. And so we'll continue to increase the efficiency with which we use the assets that we've already purchased and deployed. And so that'll create an opportunity for us to either have more efficiency and then have more capacity, or potentially even in the future we could take on other their core products. But I think as a $1 billion business just selling spacecraft engines, we would need to have all of the companies that are out there successful and buying them from us, and I don't think that's realistic either.
Right.
So I think some combination of the market continues to grow as it has for the past 7 or 8 years at a 8-9% per year CAGR, and also Astra would leverage the platform that it's built to make other things too. Would need to be true to make the whole thing.
Are there any and I know you have to be careful with what you say here, but in terms of like any type of big catalyst potential contracts, like is there like a possibility you get sourced into like a OneWeb Gen 2 constellation capability where all of a sudden overnight you see your backlog grow from like where it is today to like 3 to 10 times anything like that in the works?
Yeah, I'll say we're competing for a number of large contracts, and any of those contracts would see us need to further scale, and scale is what we're good at. So I hope we have that opportunity. I hope that is presented. But I'll tell you this: if we win more contracts, it's because every day I wake up and personally attend a call and listen to any impediment impacting any customer, and that has my attention. And we're doing everything we can to deliver for our customers spacecraft engines that work every time. And so, you have the resources that we've invested in this business behind these programs. And if we do win, these opportunities that are out there in the market, it will be because we really focused on our customers, and we delivered on time, and more importantly, we delivered engines that worked every time.
Yeah, exactly. Let's talk a bit about financial health. You highlighted some of the things that you're working on right now with the at-the-money offering and the debt facility. As of the end of June, I think the company reported something like $26 million of cash and equivalents on the balance sheet. And I think you guys forecasted that to be around 15 to 20 by the end of September. How are you thinking about cash needs to the extent that you can share publicly any data points? How are you thinking about cash burn? Is the prop business spitting out enough cash flow to fund the business, or at least fund a good chunk of the business? How are you thinking about cash needs, right? That's obviously the question everyone's thinking about and asking. I'm sure that's another one that you get all the time.
Yeah, and keep tuning into our earnings calls where I give the official updates.
Yes.
So, what I could do is I can summarize what, obviously we think about cash all the time, every day. What we're trying to do primarily is bring cash in by shipping spacecraft engines right now in the short term. Also, we bring cash in when we deliver milestones for the Space Force and sign other contracts. So the best way for me to finance the business is to deliver for our customers. The second best way for me to ensure that we have sufficient cash is to just absolutely be ruthless with expenses. And so we have looked across every opportunity internally to, can we do this? Do we need this software license? Do we need this? Do we need this light tower in the parking lot that we're renting? Do we? So I am looking over every decision that we've made over the past couple of years, and I'm making sure that we're not spending money on things that are not critical to delivering for customers. And then the third thing is, of course, as a public company, we have tools that we have put in place, such as the ATM facility, the debt facility, and then if there is a fourth, we're also just in the market looking at various strategic options, strategic investments. We have a lot of folks that are very excited about the businesses that we've built, and if there's an opportunity there, I wanted to put it out there. We're working with PJT to explore those opportunities for the company.
So, and I'm gonna touch on that in just a second. I do want to talk really quickly about team construction and retention, right? So, you're going through, or you've gone through this pretty tough time in a company's life cycle. How are you thinking about retention and also like talent acquisition, right? You've had a couple key technical leaders, I think, depart the firm. You're in the Bay Area. There's tons of talent there, but how are you thinking about just general retention and acquisition?
Well, I would say that the team is incredible. It's been one of the things that really allows Astra to. And we put satellites in orbit 3 years faster than any other company. We've built this production facility. We're not even 10 years old, and we built a rocket factory that when we return to the pad with the reliable vehicle, we'll be able to produce at scale. It's because of the team. It's not because of me. It's because we've got some of the most experienced leaders in the space industry leading these programs. On the launch side of the house, we've got my co-founder, Dr. Adam London, and Doug Kunzman. So Adam's kind of the tech lead, and then Doug Kunzman, we recruited out at Blue Origin. Doug was brought in to lead the New Shepard program, successful launch of the flight with Jeff and Will Shatner. So I figured if he can win that space race, and if the stakes were Will Shatner and Jeff Bezos, he can totally win our space race where the stakes are a flight working or not, a test flight working. So I'm really confident in the team. And then on the spacecraft engine side of the house, we brought in Margaret Denere. She was always leading our mission management organization. She's incredible. We have under her Dalibor Duran, who was leading manufacturing at Planet for a couple of years, now leading production. We just brought him in. So we've managed to continue to bring in some really incredible talent, even as things have been challenging. I think people see, if you really are following this industry, sure, it's challenging times economically, but every company is having challenging times economically. There isn't a space company out there that isn't looking at their stock price, or isn't looking at having to cut folks. So Astra is really trying to be a place where, yeah, it's tough, but also we're building some products that are flying to space for our customers, and we're gonna do things here that you're not going to get a chance to do if you're inside a big aerospace company.
Right. So, Chris, we're going to have a lot of investors listening to this interview, right? The company currently is trading around $70 million market cap, something like that, 60 or 70 last I checked. A far cry, right, from the multi-billion-dollar market cap we saw back in 2021. I mean, obviously that's the case for a lot of different companies, not just yourself. But in your mind, like today, like if you're talking to an investor, like what is the investment case for the company? Like why buy the stock today? Help us kind of I would love to hear sort of your pitch on the upside scenario of the business.
I would just look at who our customers are, right? I would look at the end customer of this is industry. It's the United States government. It's the military. You look at uh, what the impact that Astra is having by powering so many satellites in space right now. The impact that we could have if we return to the pad with a vehicle that we can produce at scale. Nation states have attempted and failed to accomplish what Astra has accomplished. Uh, we're one of only a few companies that I can look up and see satellites orbiting Earth that we put there. Not many companies can say that, and we're a company that did it faster than the leading private company in our space. And so we have a level of tenacity. We have an incredible team that is not going to give up and is obsessed with taking care of our customers. So I've always believed that if you've got a great product, and I think we do, and you are focused on your customers, you'll find a way. And I think the United States government needs a really successful industrial base in space. And you've got to look at Astra and say, that's a company that the United States government really needs to see continue. And so if I'm a shareholder, I'm looking at a company obsessed with customers that has some of the largest contracts and powering space systems, contracts with NASA for launch, contracts with the Space Force for launch. This is a company that is going to work incredibly hard to deliver for these customers. And when we do, we'll be in a much better spot. And it's my job as CEO to make sure that we tell that story. It's why I'm here. And we're gonna continue to do what we're doing, work really hard, manage expenses, be really smart and thoughtful about the capital that we're raising, and that's all I can say.
What have you learned as a CEO of the company over the last couple of years? Being a public company is a completely different ballgame. Do you kind of wish you were still private?
I would say that the opportunity to share the we always had investors, right? And as a private company, uh, you're very selective about who you give the opportunity to invest. As a public company, you have to put it all out there, right? You have to share everything that you're doing. We've tried to do that as a public company because we wanted to give other people the opportunity to invest in space. Not just people that knew how to get into a company like a private company uh, venture round. And so, I, I have family members who've put money in the company and that believe in friends. And, we have people that really, really believe in what we're doing. And so I work really hard every day to try to make sure that when we're able to ship more of these engines and come back to the pad with a launch vehicle, uh, they have the opportunity to participate in that side of the equation. I would say that the hard part has been there's a lot of things that you have to invest in that are not um, mission, right? So as a private company, you could put almost every dollar into the product, into your engineering team. As a public company, you have to put a lot of systems in place. We had folks, that sued us. The moment we took the company public, and but while the suits were dismissed, we had to invest a lot of money in legal fees and things like that. So so the kind of purist in me, I'd love to just put every penny into things that deliver value to customers. And as a public company, there's a lot of overhead and cost associated with just operating the business. And don't get me wrong, they're necessary. And but when you're operating and you're trying to be very lean, they represent a significant portion of your operating costs. When you wish you could just put every penny into delivering things for your customers. And so I would say at times like this, it makes me question, but I would say we're fully committed to our shareholders, and we're fully committed to making sure that we're doing everything we possibly can to make the business reduce our expenses and start to ramp the shipments of our products so we can start to see revenue accrete. And hopefully shareholders are paying attention and then they're looking at this and they're seeing us fight really hard for them. And
look,
that's all I can ask for.
I don't think anyone wouldn't use the adjectives tenacity and commitment in terms of describing you and the team and the continuous desire to make this work. And, I do think that sometimes people forget that a lot of the beauty of sort of the space industry, right, is that most people are rooting for each other, regardless of what you might think, right? Most people are rooting for each other because every single failure that occurs in when Virgin Orbit failed, right? It's possible that the competitors were like, oh yeah, like, look, that's great. Like, clearly didn't work, but ours is better. But the problem is every single time you have a failure like that, it scares investors away from the sector and the industry. And the more times that happens, even the good companies won't get the right funding, right? So I think it's really important. And I do think, I'm certainly rooting for you guys and your success. I think it's extremely important for the industry. I think the more companies that don't get to do what they say they're going to do is ultimately it's going to affect the entire industry at large, right? And it's going to affect companies' abilities to be competitive. So yeah, look, hats off to you, Chris. Like, you've had it's not been easy. Building a rocket is not easy, and getting to orbit, you did the seemingly impossible, getting to orbit. But continuously doing that it's difficult. There's no question. So yeah, I would just say like, hats off to you and the team for making it to orbit and still putting in all, your time and energy and commitment to this business. Any last words or message that you want to share?
No, I think, I appreciate you saying that. I think a lot of folks are always excited to see people drum up, competitive dynamics and things like that. But, I feel like I'm not competing with other companies as much as I'm competing with time, and with physics, and with, have we made the right decisions to invest the right amount of time and the right amount of capital in the right areas to ensure that we have a vehicle that works, or a spacecraft engine that is reliable every time. And that's what we're competing with every day. It's an intellectual pursuit more than it is a competitive pursuit. Because if we get it right, the market's big enough for all of us. And I think so. Frankly, someone once asked me, how did you feel about the Tropics missions being flown up by Rocket Lab? And I said, I watched every single one of those flights, and I was so incredibly grateful to Rocket Lab and Pete for getting those other two missions up, because it meant that the NASA mission was successful. And so, getting back to the North Star is we care about our customers, and we were able to see those fly. I want to come back with Rocket 4 with a vehicle that is not only able to address a much larger segment of the market, but has the reliability that our customers have clearly, and our shareholders have clearly said, you need to have. And so I definitely applaud you for that. I sit here every day thinking about how we can make this work, not about competitive.
Yeah, exactly. Well, Chris, thanks for being on the show. Really appreciate it, and we'll get you back in a year and see
Awesome.
how things
Thanks,
are.
man. Looking forward to it.
And yeah, really appreciate it. So thank you.
Awesome. All right. Thanks again.